Coronavirus sending global stock markets tumbling on Monday. Things, though, as I said, are looking a little bit more stable today. And our business editor, Stephen Carroll's got all the latest for us, Stephen.
Stuart, what we saw on Monday was really the fears that had been playing out in Asia for several weeks go global and get speed up as well. That, of course, as we had that news of the outbreak in Italy over the weekend. So that gave us the worst day in 2 years on global markets. Things, though, looking that little bit calmer today. Let's start with the picture in Asia. Now, Japan's Nikkei plunged today, but it had been closed on Monday, down 3.3%, but a small recovery on other markets. The Kospi in Seoul up by over 1%. Now, that market was down by almost 4% yesterday, and really not out of the woods as new figures on consumer confidence have shown today, down to a 6-month low, plunging compared to the previous month. Companies are dealing with this effects both in terms of supplies, as Chinese factories have stalled production, and also a drop in demand from consumers who are travelling and spending less. And that's being played out on company share moves as well. Fast Retailing owns the high street retailer Uniqlo. They're being hit on both fronts, supply and demand. Japan Airlines seeing a slump as well, shares down 4% today. Of course, people are travelling less, and connections to China have been suspended too. Shares, though, in Fujifilm up almost 3% today. That's after local media reports that the Japanese government was considering using an anti-flu drug developed by a unit of that firm to treat the virus, proving that there are some companies seeing gains even in this general environment of a sell-off. At the open today in Europe, now European shares had seen sharp falls on Monday as well. Slight recovery today. Budget airlines really got a hammering yesterday. EasyJet shares down 17% at one stage. They're up by 1% today. The Italian market, that was down over 5% yesterday, so up by about 0.5%. A small recovery, but not really anything close to regaining the losses that happened during trading on Monday. We've also seen the price of oil tumble in recent weeks. That's as Chinese demand has dried up. Brent crude today trading for $56.77. That's the international benchmark for oil, really. Similar movement on WTI. Both trading up today, a little bit stronger, and that's after comments from Saudi Arabia's oil minister saying that the members of the OPEC cartel of oil producers are paying close attention to the situation as regards coronavirus. Perhaps they might consider another production cut to support oil prices. That's giving oil a little bit of a boost today after a slump yesterday. Now, meanwhile, we're getting bits and pieces of information from companies about how they're seeing their bottom line impacted by coronavirus. One of the latest companies to talk about this is MasterCard. It doesn't even have a business in mainland China, but it's still expecting earnings in the first 3 months of this year to be lower because of a drop in cross-border travel and international commerce. Now, another warning today coming from the owner of French fashion brand Sandro. SMCP says its sales and profitability have been significantly impacted in China, but also in other regions due to a decline in Chinese tourists. That company isn't alone. Others in the textile industry are facing supply shortages, as Cole Stangler reports.
Fewer styles for sale, spelling trouble for the garment industry as production in China stalls. According to the French Fashion Institute, just over a quarter of clothes sold in France are made in China. This wholesaler in the suburbs of Paris is getting worried. Many of his suppliers have had to halt production.
We have 400 brands today, and many of them source from China, some of them from Italy. We fear the worst if things continue like this.
Chinese factories have struggled to get up and running again. According to the government, just 3 in 10 small and medium-sized firms are back to work.
Deliveries are difficult. Orders for small and medium-sized businesses are on the rise, but there is no way to carry out production in time.
If the trend continues over the next couple of weeks, upcoming fall and winter collections could be delivered late to French stores. That's because after leaving the factory, it can take around 40 days for shipments by boat to arrive. For many businesses, delays are a hard pill to swallow.
It's a crisis on top of the crises we've gone through the last few years. First, there were the yellow vests, which was a crisis. Then all the strikes over retirement reform. Today, the crisis is over coronavirus.
To help firms weather the storm, the French government has extended measures deployed during those protests, including compensating workers for reduced hours and delaying payroll taxes.
questions now turning in many places to what policymakers can do about this limiting the economic impact. Outside of China, the policymakers considering their options, the traditional tools available to them, particularly to central banks, of interest rate cuts and bond buying, not particularly helpful in this situation because they stimulate demand in an economy and not supply, which is where the big problem is for countries outside of China. Governments may have to step in to help businesses to avoid bankruptcy during this difficult period. Measures like tax breaks could help those who can't get supplies from China, but that is a temporary fix and it does come at a cost to the taxpayer. Stuart.
Thank you very much, Stephen. Stephen Carroll with the Business News on France 24. Very much fixed, as you saw there, on coronavirus. And we're going to stay with the same subject. In fact, Nick Rushworth